Let's understand the significant role played by general insurance in our life. The first important point or the first important role which is played by general insurance is protection to assets. Human beings struggle a lot for earning and put lot of effort into making the properties. But as misfortunes happens at any point of time, humans wants the protection for his asset which he has earned from his hard work. General insurance takes the responsibilities for paying the compensation in case of loss of assets. The second important role played by the general insurance is the supporter in crucial time. It's crucial time when someone loses their assets because all the assets which are earned or earned by putting lots of efforts and time at this crucial time, it is the insurer who supports by compensating the losses made by insured. The third significant role played by general insurance is it protects the financial interest. Goods which are insured under the insurance policy are very much protected by insurer. In case of loss or theft of such goods, which are the subject matter, the insurer will take the responsibility of the loss as per the terms and condition of the policy, and the insured will be getting the amount of claim which will protect the financial interest of the insured. The next important or significant role of general insurance is it gives a sense of relief. When the hard earned goods are lost, the situation of stress and tension arises automatically. The owner of such lost goods suffers from mental trauma to a great extent, and this may create the unpleasant climate for the entire family. However, if the goods are insured with the insurance company, the insured and his family can take a breathe or relief as the loss of such goods will be borne by the insured. Now, these are the important role or most important key areas where the general insurance is playing the role. So these are not only the exhaustive point. Apart from that also, we can explore this answer, but these are the most important areas where general insurance company is playing its role. Now let's move and understand what are the various types of general insurance. The first type of general insurance is health insurance. In the present stressful life, people face medical emergencies and spend a lot of money on the treatment of it. The lifestyle and other factors are responsible for many diseases, which makes the family suffer from financial crunch. And in this situation, it is the health insurance which protects the insured from spending money from their hard-earned earnings to hospitals. Health insurance provides peace of mind in the condition when any medical emergency arises in the family. Health insurance helps in getting the cashless facility during the medical and surgical expenses. It also covers the cost of ambulance charges, medicines, hospitalization expenses, etc. There are three types of common health insurance policies. The first one is individual policy, which is for covering the health insurance of one individual. The another policy is family floater policy, where entire family can get protection for health insurance for one premium. And then another one is surgery cover. If any person is going through the surgery and there are contingencies, then he can take the policy of surgery. Then the another general insurance is motor vehicle insurance. Now, as far as Bharat is concerned, as far as the vehicle insurance policy is concerned, every person is supposed to get insurance on his or her motor vehicle. That is mandatory. So motor vehicle insurance is providing protection against the damages or liabilities to a motor vehicle against on-road or off-road emergencies. In Bharat, the owner of the vehicle will be held responsible to third party for his or her loss of life or property which took place due to use of vehicle in public. Hence, it is statutory for the owner of the vehicle to have insurance policy on motor vehicle which protects the third party from damages. For example, Mr. A owns a car. and he met with one accident with Mr. B, where Mr. B got injured. Now, of course, Mr. B will ask for the claim from Mr. A only. Now, this incident has happened due to motor car of Mr. A, and Mr. A has already taken insurance policy on that. So whatever claims are made by Mr. B from A, it will not be paid by Mr. A, but it will be paid by insurance company because the motor car or motor vehicle of Mr. A is insured with insurance company. That is called as motor vehicle insurance. Then the another insurance is home insurance. Home is the property which can be considered as the most important and most precious property of people. People spend hard earned money on making their own homes and prefer to get protection on it. Home insurance protects against the damages to the structure of home and contents of the home, depending upon the type of policy taken. Against natural calamities or even disasters, when human is responsible, it protects homes from theft, fire, burglary, flood, earthquake, and etc. The another general insurance is fire insurance. Fire insurance is a type of general insurance where the insurer is taking the responsibility and gives guarantee to the insured that if anything happens to his or her property due to fire, then insurer will pay the damages occurred to the property which is under fire insurance policy. The fire insurance policy can be of two types. One is valued policy, another one is average clause policy. When the insurer agrees to pay a specific amount of money for loss of the subject matter due to fire, as and when the insurer agrees to pay the specific amount, then this is called as valued policy. For example, if the fire occurs due to some reason, an insurance company have already promised to pay a certain sum of money, then it will be called as the valued policy because already the value of the goods have been done by insurance company and they are making the payment of that. Then the another type of fire insurance policy is average clause policy, where the insurer is giving the premium for one specific ratio or weightage of his goods. For example, Mr. A has taken policy of rupees 1 lakh, whereas he is keeping the goods of rupees 2 lakh in the godown. That means he has taken policy only for the 50 percentage of the goods. He has taken policy for 1 lakh and is keeping goods of rupees 2 lakhs in the godown. So insurance company will be making payment only for the 50 percentage of the loss which is happening in the godown of Mr. A, and the maximum loss which is to be borne by insurance company will be rupees 1 lakh. That is called as average clause fire insurance policy. The another general insurance policy is marine insurance. The most economic route to send the goods to foreign customers is the seaway. However, until the goods reach to the destination, there is a high risk of getting the goods lost due to storm or theft. There are even chances of getting the goods damaged before it reaches to the final destination. It is marine insurance which is protecting the goods lost or damaged due to danger of sea. It is a kind of insurance contract which covers the loss or damages to vessel or to cargo to people during marine transport. So we can conclude that marine insurance is for the goods which are sent through seaways to other countries or to other destination. Then the next one is travel insurance. Travel insurance is the agreement between insurer and insured, where the insured gets protection for the medical and non-medical emergencies during overseas travel, which ensures a worry-free travel experience. It is a kind of protection which protects the insured against any kind of misfortune while traveling. The general insurance protecting against the contingencies like loss of baggage, medical emergency, delay in flight, loss of passport, etc. Some of the important travel insurance policies are individual travel policy, family travel policy, student travel insurance, senior citizens, travel policy, etc. So these are some important types of general insurance. I hope this particular video is useful for the students. Thank you.